This is what we see here. There is a pound versus Japanese yen. And again, when we look at the two different models, I'll remove one of the two models here. And this market has been trading in extension. While the pound versus US dollar has traded, was trading in a traditional measure move before. Also, this market is trading traditional measure move. The point is, in the pound versus US dollar, we had a sequence that was respected. What is interesting here is that this market was actually indeed respecting a sequence here, and I'm going to show that sequence to you. And that was highs to lows here with participation in this area, 163.47. This is a traditional measure move, and price got into that first area and there was a reaction. The point is that while the pound has respected the 50%, during that reaction, Algos and smart money in this market, during that reaction, was not capable of holding this price below the 156.86. Despite that, this market has continued lower, and actually the market can now be modeled in a number of ways. We can actually use the highs to lows here, but as you can see, there was no participation, that the market could not make it there. So we cannot say that this area was an area where shorts have participated. On the other hand, what we know is that once we traced this, we know that the market anyway became extended, and we can try to use the low that we have here to lows. And when we do that, we see that shorts were not inclined to pick up this market. Now, what's the meaning of this? Well, you know, this market, it's not reacting to a valid 50% level. This market reacted on the short side to a valid 50% level, and that's the reason why this market continued lower. We had a measure move here, and this very large measure move, which was known basically 3 years before this market came into this area where potential short participation could have been encountered. In fact, it has been encountered here in this area and in this area here. So this market has continued lower. Now, apparently, the sequence here, the sequence of measure move that models Algos has been interrupted here, not necessarily on top of an area where there's a strong reversal, because there's no area of participation below this market. But this could actually indicate that we could see some sort of reaction here. Now, an help is given when we overimpose the other models, and again you can see the participation that came in these short value areas here. And obviously, as I always like to say, the participation of in area where also Algos and smart money are participating are much stronger than and produce much more durable moves in the markets when the participation comes from levels that are watched by Algos. And this is pretty interesting because it also shows another reality of modern market, which is the fact that when Algos or smart money participates at larger time frames, then the lower time frames will align as well in the direction of the larger times, and will try to push price into the target areas, as it happened here, and then it's continuing to happen. So that's very, very important. So it doesn't mean that dumb money, dumb value areas should not be considered. They should be considered because they can give They can give quick and good trades, for example, reaction in this area or reaction in this area when the market actually participated. However, in order to understand whether the market can put a continued move, we need to look at how algos are interacting with the market, how algos are actually pushing that market around. Now, what do we see in this market? What we should anticipate and how we can take advantage of this. So if the weeklies are not interested in pushing this price lower, and they proved it here when this market actually pierced to 142.96, they proved that they were not in control of this market. What is in control of this market is the dump money area that is selling this market in the daily value areas here. And as soon as and when this market comes back into the weekly value area, you can see that there is a sell-off. However, that sell-off is not sustained, and the reason why it's not sustained is that smart money has done its job. They took profits once and twice, and they're done now. They are waiting for a new setup, and the new setup that we're looking for was the lows to lows, and they didn't show up in a way. Now, to me, that indicates it's possible for this market to rally into this weekly value area and up to the 140.33 again, and we will see whether the bears, the smart money bears will be willing or capable of picking up this price. So what we're seeing at the moment is a new reaction into an area of potential participation. So for this, if you are long this market, you should probably take partial profits at 136 area, and then probably remove the position if you make it there into the 140.27. And I'm telling you here the reason why. So that's the reason why we look for a potential reversal in the 136 area, because in the 136 area we have the start of the weekly value short area here, and a little bit higher we have the start of the smart money area where smart money will come in to sell. All right, so this concludes the review for the pound versus the Japanese yen. Let's